Japanese candlesticks are a popular tool in technical analysis to help traders visualize the price movements in the financial markets. They were first developed by Japanese traders back in 18th century in order to analyze the price movements of rice. But as for today, they are used to analyze the prices for various assets like stocks, commodities, and even currencies. In this video, I will cover the anatomy of candlesticks, different types of them, and how we can get the benefit out of reading them correctly. Please stick with me until the end of the video because there are a lot of golden points which I want to tell you, and they are going to directly affect your trading strategy. And believe me, it doesn't matter if you want to trade on cryptocurrencies, stocks, commodities, or any other type of assets. These candlesticks are the fundamental basics which you need to read and you need to know in order to become a successful trader. Let's start by looking at the anatomy of a Japanese candlestick. Each candlestick consists of a rectangular body and two thin lines that extend from the top and bottom of the body, called the wicks or shadows. The body represents the difference between the opening and closing prices for a specific time period, while the wicks represent the range of price movement during that time period. There are three types of Japanese candlesticks: bullish, bearish, and neutral. A bullish candlestick occurs when the closing price is higher than the opening price, indicating that buyers were in control during the time period represented by the candlestick. Conversely, a bearish candlestick occurs when the closing price is lower than the opening price, indicating that sellers were in control. And of course, as the name says, the neutral candlesticks are telling us that the market is in indecision sequence. So as you can see, from the toppest point up to the bottom of a candle is called the range of the candle. And these are the wicks, or let's say the shadows, as you can see. Not all of them have shadows. Some of them have, some of them they don't have any, which I'm going to talk a lot more about them. But here we just want to know the candles. And then this is the body of the candle. It is really easy. Don't make it hard for yourself. Don't go easy on yourself. The red candles, or let's say bearish candles, always they open from up and they go down. So the open is on the upper side and the close is on the downside. And for the bullish, or let's say green candles, it's the opposite. So they open from the bottom and they close on the top. This is the reason, if you take a look at here, always the candles openings are right after each other. So if there are a couple of green or bullish candles right after each other, so each candle opens right after the candles before it where it closes. So it is the close of this candle, then next candle opens from here. And the opposite is the same. If there is a bearish candle occurring right after our bullish candle here, so it was the close of the bullish candle, and then on the bearish candle, this is the open, and then it goes down. But you really don't need to know this kind of stuff. These are only for getting to know the anatomy of the candles. Then there are lots of indicators doing the job for us and showing us the average or the closes of the candles, which are important to us. Opens are not really important. We are working with the closes of the candles, but I'm going to talk about those later on a lot. Traders use Japanese different candlesticks to identify patterns in price movements that can help them make trading decisions. They are divided in three main categories: single, two, and three candlesticks patterns, which I tell you everything about the very first category, which is single candlestick patterns. and the next two will be covered in upcoming sessions, so stay tuned. The most common single stick patterns are hammer, inverted hammer, dragonfly doji, and bullish spinning top, which are bullish candlestick patterns. Next, we have neutral or basic patterns, which are doji, spinning top, mariposa, and star. And last but not the least are bearish candlestick patterns, of course the single ones, which are exactly the opposite, peer-to-peer, one by one, opposite of their equal in bullish candlestick patterns. So hanging man, exactly opposite of hammer, or let's say hanging man is exactly the hammer, but it happens when the price wants to be reversed from a resistance zone, which I'm going to talk later on. And then we have shooting star, which is exactly opposite of inverted hammer, gravestone doji, opposite of dragonfly doji, and bearish spinning top, which is exactly opposite of bullish spinning top. The name is crystal clear. But remember that these patterns only work on supply and demand zones, or let's say support and resistance areas. So if you haven't checked my previous video, go check it out. I leave the link above here because it is mandatory to be watched before you watch this video. All the videos have numbers, so you know which season and episode we're exactly in. So please go check it out first if you haven't yet, and then continue this session with me. Well, let's start introducing the single candlestick patterns one by one and make some examples for them though. The hammer occurs when the opening price is higher than the closing price, and the lower wick or shadow is much longer than the upper wick. This pattern indicates that sellers were in control early in the time period, but buyers stepped in and pushed the price back up. Now let's go to the chart and make an example. Before showing you anything more about the candlestick patterns, first you need to know, and this is mandatory and it is really needed to know, how to draw support and resistance levels and be familiar with them. So if you haven't checked my previous video on this matter, please go check it out. I leave the link above here again. I highly recommend to watch that video first. Do not postpone it because you're going to be in trouble finding them, and there's a lot to know there. Let's find one hammer. Yep. We have one here. Alrighty, this is our hammer. The color doesn't matter really if it is green or red. It is not important. But if you take a look at here, so what should it look like? Is it exactly should be not having a wick on the upside? Let me make it really easy for you. You must see something like this. There is a rectangle like this, and there must be a wick to the downside. And the size of the wick must be 2 times more than the body of the candle. So if we divide the whole range of the candle into 3 parts, the wick must cover more than the half, or let's say more than 70% of the whole range travel. If there is a small wick to the upside, it doesn't matter. It's not important. It's not that important. But if there isn't any, it's even a more powerful signal for us. So what really happened here? This is our support zone here. We have a support zone which is supporting the price to the upside and bouncing the price to the upside. As you can see, and we said before, the sellers wanted to push the price to the downside, but the buyers came in and pushed the price up. By the time it is the 15 minutes time frame, it means each candle takes 15 minutes to be formed, to be opened, for example, from here, and to be closed from here. And then in the case of our hammer here, so it was open here, it went all the way up to here, as you can see. Let me zoom in more. So it went all the way up to here. We don't know when exactly. Maybe it went at the beginning or came down, then came down or went up, but it happened. And it went up and then down, and then the buyers pushed the price up, and our candle closed here and formed our beautiful hammer here. So what the hammer does, you don't really even need to remember the name of the candles. You only need to know there is a body with a long wick to the downside to our support level. It means that the price is about to bounce off to the upside. It went up. Did it go up? Yes, it did. And it worked beautifully. Let's make another example. We had another, I think I've seen one more here. Yes, here's our support level, and you can see we have a really nice body here, and the wick or the shadow is 2 times bigger than the body of the candle. This upper shadow is not that important, and as you can see, it worked again and pushed the price to the upside. These are really strong signals, but can you only trade with these? Of course not, because the market is not always working like this or always going to your expectations. It is full of surprises and you have to be ready for them. But we are trying to increase our tools and strength in order to predict the best prediction for the future of the market, whether we want to scalp in low time frames or we want to be a day trader or a swing trader. It doesn't matter exactly. What we need is money in the end of the day. Well, the next one is the inverted hammer, which is more or less exactly like the hammer. But let's say the hammer is more stronger in terms of giving us a signal as price reversal. But we can even use inverted hammer as a strong bullish signal too. Let's go to the chart and find some examples. Well, this is an example exactly from our previous video, which we talked about the support and resistance levels and how they transform to each other. So you can see the inverted hammer formed here, and exactly right after that the price bounced up from this level and went up, and you can see how beautifully it worked and the price went up. Next we have dragonfly doji pattern. As you can see, it happens exactly like the hammer, but it is less stronger in terms of giving us a signal, but it works. It happens on a support zone, makes the price to bounce off from there. So these are the signals that we can look for and find some opportunities to enter a long position or a buy position. If you don't know and you're not familiar with long position, short position, and these kind of stuff, I made videos about them too, which I'm gonna leave the link above here, and you can check that too. So as you can see, this is our beautiful dragonfly doji here, and this is our support level, and it made the price to bounce off again, and it went up beautifully. So these really works, but we need to combine them with the other data, which we're going to learn in the future. These are not enough. Do not go to the market and trade for yourself. This is a lot more dangerous than going to the road with a car without any brakes. Believe me. And last but not the least, in the list of single candlestick patterns, of bullish ones, is the bullish spinning top. As you can see, there are 2 wicks equal to each other, and there is a body, a small body in the middle, which this again causes the price to bounce off a support area and reverse from there and go up. So we can take the long positions after seeing this pattern. But these are, again, only confirmations. We cannot trade only with these. Let's go to the chart and find some examples for this one too. So as I said before, the color of the candles when we want to look for them are not really important. The important part is to find and determine the support and resistance levels correctly, and then the color of the candles are not really that much important. This is exact one dragonfly doji here, and then right after that we have one bullish spinning top. So this is even a more stronger signal to go long or go for a buy position. Or even before that, if you can see here, we talked previously, we can see a hammer here. So these are all strong signals. If we took a trade here, let's see, we wanted to go long, so we need a confirmation candle, which we talk later on, and how to set our stop loss and take profit. We haven't talked about those yet because we are not there yet, but I just only want to tell you, if we took this trade, it was, as you can see above here, this number here, it was 0.49, let's say almost 50% of profit. If we use leverages like time our profit here, like 10x leverage, it was like 5% profit, which is extremely good. It is massively good. Well, that was the end of bullish candlestick patterns, single candlestick patterns, of course. Please go find them out for yourself on the chart and practice. And if you have any questions, just leave them in the comments below. I would be really happy to answer them. Well, now it's time to talk about the bearish single candlestick patterns. This one is the hanging man. The reason is obvious from the picture, as you can see. I hope that is not a harsh picture for YouTube rules. So a hanging man is a bearish reversal candlestick pattern that occurs after a price advance. The advance can be small or large, but should be composed of at least a few price bars moving higher overall. The candle must have a small real body and a long lower shadow that is at least twice the size as the real body, which the rules are exactly as the same as for the hammer, but that was a bullish candle reversing the price from bottom to top. It means it was occurring on a support area, and in this case this is exactly opposite, and it's happening reversing the price from top to bottom, and it's happening at the resistance levels. Let's go to the chart and make some examples. Alrighty, as we talked before, these kind of patterns, they only are validated while they are happening on support. Let's change the color to green, on support and resistance areas. Then we can count on them. So if you take a look at here, let me zoom in, and you see a beautiful hanging man. You can see there is a small body. Let me just zoom in more. Small body here, and then a long wick or shadow to the downside, and it causing the price to reverse from this resistance level and going down. As you can see, in this case, it happened beautifully. The next pattern which I want to tell you is the shooting the star. As you can see it here, it is exactly like hanging man, but it's reversed and it is upside down. And if you want to make an example, equal example in bullish candlesticks, it's exactly like inverted hammer, but it's happening on top of the price movement on a resistance level, and it's causing the price to going down. So if you see a signal like this here two of them happening right after each other, it's a strong reversal signal and you can count on it. Of course, it depends on your trading strategy and the time frame and the asset and the market that you're trading in. It depends on lots of elements, but let's forget about all of them. We think that we have a trading strategy and this is the last signal and confirmation that we want to get, and yes, it is a good one. So we can just enter a short trade. If you don't know what is a short trade, you have to watch my previous videos. But if we take a short trade after the confirmation candle, which is here, which I'm going to talk about later on, what are the confirmation candles are. So we put our stop loss here and then we took a trade here, and you can see it was a pretty good profit. Wow, it was amazing. Just like that, you had a beautiful trade, making money for you, making you happy trades. Well, the next one which I want to tell you is the gravestone doji. It's exactly like the shooting star, but the only difference is that the body is so small or almost not there. So if you can see, this is, let's zoom in. This is the shooting star, and this one, this little guy here, this one is the gravestone doji, but the names are really not important. I told you before, the only important thing is to correctly find support and resistance levels and wait for these patterns and combine it, of course, with our trading strategy, which we haven't come up with yet, but the names are not really important because the names are not money going to your pocket. The names are just some symbols. You can call this, I don't know, whatever you want. You can call it upside down inverted hammer. You can call this Thor's hammer. Whatever you want to call it, it doesn't matter. I myself, I don't use the name though. I just look at them and see, okay, there is a long wick here. It means that the price doesn't want to go that way. It means that the sellers are coming to the market and they are overcoming by the power the buyers, so they push the price down. So at first the buyers came in, they pushed the price high, but they couldn't win, and the sellers came in and they pushed the price down, so it occurred this candlestick here. It means that the price tends to go down. As you can see, it was a free fall for the price and boom, it went down. And you can see, again, if you determine the support and resistance levels correctly, again here, the opposite happened. Here's a hammer and the price went up. Wanted to go up, yeah, a couple of times and then went up. Finally, this is all about it. You have to determine support and resistance levels. That's what's all about. Okay, here's with bearish spinning top. This is this beautiful little guy here. As I told you beforehand, the color doesn't really matter. It's just like the size. If you take a look at here, it just caused the price to be reversed from this resistance level and going down. If we just come here, and it's causing the price to go down. What I really need you to do, and it is really important, this is critical, you have to go to your own chart, whether you're using your laptop, your PC, your mobile app, whatever you do, just go to your own chart and try to first find the support and resistance areas. Second, try to find these candlestick patterns and see if they work. And if they didn't work, see what was the reason. Did you find the support and resistance levels? And if you find them correctly and they are breached or broken, like in this case here, for example, so of course the support and resistance area, as I told you beforehand, it's not going to last forever, so they can be lost, and that's part of the game. But I need you to go and find them for yourself, and we call this market watch. Watch the market, try to find these examples. Did they work? And if you have any questions, just please feel free to shoot and ask me in the comments below. I would be really happy to solve your problems and answer you one by one. That's my pleasure. Last but not the least are the neutral or basic patterns, which I want to cover up here. Let's dive in. The doji occurs when the opening and closing prices are equal, resulting in a very small body and long wicks. This pattern indicates indecision in the market.
And traders often look for confirmation in the form of a bullish or bearish candlestick before making a trade. Let's go to the chart and see what it is all about. This is a really good example here. As you can see, this doji candle occurred here. It means the market is in indecision. It means none of the buyers nor the sellers cannot overcome each other's power here. So they cannot push the price either up or down. So we need to wait on this resistance level, let's make it red, and wait for some confirmation. So next we can see the bearish spinning top, then we can see the other, and these are the two candlestick patterns which I'm gonna talk in upcoming sessions, but we can see more confirmations which tells us that the price will go down. And as you can see, the price reversed from here, couldn't manage to continue going up. So these are neutral patterns. Either they can just continue going up or they can reverse. So we need to wait for some confirmations. And it is the same for the rest of the neutral candlesticks too. So what I need you to do is to go first find the support and resistance areas like this, as we've done before. Practice, then try to find different candlesticks and even find some chart patterns which we talked previously, and I made a video for that too, like double bottoms, double tops, head and shoulder patterns. Look for reversal patterns because we are looking at support and resistance areas. The continuation patterns, we don't want to talk about those yet. We only want to find the places which the price reverses from and bounce off from. So if we find this support level here and we see a double bottom here, like in this case it's a double bottom, then when we zoom in, we can see that, yeah, we had a bullish spinning top here. We knew that the price will go up even before the double bottom is going to be completed. These are the things which we can combine. In the end of this course, you're going to be a professional trader, combining all the knowledge that you've gathered during this course, sum it up with 1 or 2 or 3 strategies for different types of the market and try to make the most out of it.
So it was all about the Japanese candlesticks. I hope you like this video. In the next 3 upcoming sessions, I will talk about double patterns and triple patterns, which in the end, by combining all of them together, we can get an overlook and even a really good detailed analysis of the market and the price movements. And it's going to affect directly our trading decisions, which we're going to make good ones. Thank you for watching. I hope you liked it. If you just like my video, if you haven't subscribed yet, please subscribe and share my videos with your friends. And feel free, if you have any questions, just leave them in the comments below. I would be really happy to answer them one by one. That's my pleasure. Stay tuned for the upcoming videos. Bye-bye.